Um, First of all, if you have questions or comments, please down at the bottom of the screen, there's a little orange box called chat. Please ask questions or make comments as you need to. And I have a few questions that I'll need you to respond to just so that we move this thing along that are valuable for you. First of all, the health folks are telling us here in we are having the places that shut down early, that sheltered in place early, are starting to show results and slowing the movement of the virus a little, but there's inclinations it works. Generally, they believe the next 2 weeks are the most important 2 weeks to really, really pay attention to physical distancing. And they feel like that if more people can do that with more intent, that we will see everything, which of course is our goal today in terms of managing the virus. So I wanted to share that with you. I also wanted to share with you that the California Endowment website has put up numerous videos for education, explaining what's going on, etc., that would be great for a lot of the folks that we serve, but they did it in multiple languages, maybe 12 or 15 different languages. And some of them are videos and some of them are animations. And so please feel free to go and lift those and use those if you need those from the endowment website. First of all, I had a question for those of you who are with us today, and if you can just give me a kind of a yes or no on the chat, it would be helpful to me. And that is, how many of you have been reading the article on what you need to be doing now? Because if you've read it, most of you have read it, I don't want to go over it much in detail, but if you haven't read it, I want to go through some of it a little bit more carefully. So if you could just chat and let us know, yes, no, that would be fantastic, and then we'll take a look at that. We've changed up our agenda some today on purpose because here in the US, we're dealing with the CARES Act, and we're going to spend the first 20 minutes focusing on the CARES Act and the loan programs that are available here, and to kind of go deep in it so that you have that available. And then we're going to talk about the things that you need to be considering and doing early April in running your organizations. We're also today going to provide you a bundle of takeaways that we will be emailing to you after the meeting that will include everything we talk about, lots of materials, including videos that you can share with others or use for reference. So to begin with, we're going to go right into the quick guide for loans, and with a particular look at the Paycheck program. So here's Jeremy Hobbs to present that piece of our webinar this morning. Jeremy, go for it.
Thank you, Stephen. Appreciate it. Good morning, everyone. I hope you are being safe and staying healthy. Out here in the Riverside County area, our Board of Health has suggested that we all be wearing masks now whenever we're interacting with other people. And I know that can seem like an odd thing to do, but more and more we have to do it because, as Stephen points out, slowing the spread of the coronavirus is going to be critical for our own health and also for the strength of our healthcare organization. Doing well for you and your families, and also because if you're protecting yourselves and taking these steps, we can also continue to serve the people in the communities that are so important to all of us. If we're laid up and can't do anything, we can't do a lot to help other people. Since our last webinar, I've been doing a lot of work on businesses that I'm involved with and advising other businesses, and even more so advising a lot of nonprofits that I get the opportunity to work with. And I just, in my day, continue to use the very easy thing of looking at everything I do in terms of short-term, mid-term, and long-term. I always tell people that's a good way to look at things, at least it is for me. Right now, I have to tell you that my short term is less than a week. So when I'm looking at things I need to get done in the short term, 2 or 3 months ago, that would be a month or two. Midterm would be longer than that, and long term was very long term. Right now in my life, long term is more than 3 weeks out. So there's a lot going on. There's a lot of movement, and we're trying to keep up with it. I'm trying to keep up with it. I'm sure all of you are as well. I want to focus today on something that's in the short term because it gets released. The opportunity to apply gets released tomorrow. And so we talked with Stephen and Mihai, and I said, let's try to focus a little bit of time this morning on the Paycheck Protection Program and the application, and make sure that everyone on our call is familiar with it, is comfortable with what the next steps are. And so I'm going to give you a little bit of background in it, and then we'll go into some more practicalities, if that's okay. The purpose of this loan, called the Paycheck Protection Program, is essentially to help employers retain employees. It's about $350 billion, and it is open to 501c3 nonprofits who have fewer than 500 employees, who have had some sort of harm between February 15th and June 30th of this year as it relates to the coronavirus. The program has two components to it that are worth thinking about. One is that the loan program allows you to borrow up to 2.5 times the amount of covered payroll, and I'll go into that in a minute. And essentially what that is about 2.5 times your monthly payroll amount. Allows you to borrow that at very favorable rates. It also has a provision that if you undertake certain activities between now and the end of June, that entire loan will be forgiven. And we'll go through what some of the details on that. The most important thing that I want to keep out here today is that these loan applications are available to be submitted beginning tomorrow, Friday, April 3rd. There are going to be thousands and tens and thousands of businesses applying for this $350 billion, businesses and nonprofits. And what we've been assured of is that that money will not cover everybody. So the quicker you get your loan application in, the better. So I'm urging everyone that I'm working with closely, and the businesses and nonprofits, to do everything they can to get that application in tomorrow. And it's a pretty straightforward application. We'll go into it. Technically, the program is open until June 20th, but I think you want to get on it right away if you want to borrow this. So let's talk about some of the details about that loan. The PPP loan is administered through banks. This is not a loan program that goes directly to the SBA. Some of the other programs have been. This one is going to be administered and run through banks. So the first thing to do is to think about who is the lender currently to your organization and have a conversation with them. There are going to be new lenders named by the government, but my advice is to go to your existing lender first and right away, and that means, in my opinion, and what I'm doing is today. The important thing to do is to find out how the bank is accepting applications. Chase Bank, for example, is accepting applications online. Their system is not up and running yet, but it will be. Other banks may only take these in writing. There may be a combination, but it's worth calling up your bank and asking them, how do I submit this application? The form itself is only 2 pages, and I think Mihai can put it up there on the screen, perhaps. I'm just going to hold it up. I have it on the front and the back. It's got very few questions, but it requires you to come up with a little bit of information, and we'll talk about what that is. The overview of it, which I'll give you for just a second, is that, so here's the picture of the application form. As I said, it's 2 pages. If you just Google SBA Paycheck Protection Program or SBA 2483, That's its form number. You'll be led right to the form. It's a 2-page form. It has a 2-page instructions with it as well. The most important thing in filling out the form, that your information you're going to need to fill it out, is to know what your average monthly payroll is. And that's on that that's a line just down there where it asks that. And what that amount entails is actually a little more than you might think. So your monthly payroll includes all of your employees. It includes the benefits that they receive. It includes payment for their vacation, paternity, family, medical, and sick leaves, any severance payments. It also includes insurance benefits like group and health insurance benefits, retirement benefits, and payment of state and local taxes. There is an exclusion. The exclusion is that if someone in your organization receives annual compensation of excess of $100,000, the amount that can be counted toward this program is capped at $100,000. This also allows you to include independent contractors who are acting in an employee-like situation. In other words, if you have some independent contractors who are maybe running your programmatic outreach, that is included as well in payroll. Something like having someone come in who came in and let's say painted your organization's walls, that's not going to count. But someone who's acting like an employee, that amount counts. So all that needs to be put together, and that's going to be the number that is your, that would be an annual payroll. You're going to divide it by 12, and that would be your average monthly payroll. And what they're really looking at is the 12-month period in 2019, but that's what they'll be comparing it to. So when you have that payroll amount, and it needs to comport with what you filed with all of your other filings with the IRS. In other words, it has to have a real tie to reality because you're going to be asked to certify that. The loan amount you're going to be eligible for is 2.5 times that payroll amount. So I'm going to put up an example just in talking that maybe an organization has a $20,000 a month payroll, and that includes all the things we've talked about. That means that it's eligible for up to $50,000 of loan. Okay, and one of the other items you need to fill out in that form is the number of jobs that are in the organization. You're also going to have a choice to select which purpose you want to use the loan for. I would suggest checking all the boxes: payroll, rent, and utilities. The other I don't think is worth checking because I can't think of anything else that this is allowed to be used for. They'll also ask for, as you move through the list, applicant ownership. Nonprofits have no owner. That's a kind of a nuance in the law and in this application form. So what I've been advised to put for my own nonprofits is to put not applicable nonprofit across that line. Everything else on the first page needs to be filled out, including the questions all the way to the end of the page, either yeses or nos. And then on the flip side, there are a series of certifications that the person signing this needs to initial each of those certifications. You'll see a whole number of them. And these are actually, it's worth reading through them because they give you some guidance on the kind of information you're going to want to submit with your application. And then the document does have to be signed by someone, and the executive director, CEO, typically of the organization. So I had a question here. It says, can we go back over what's included in the monthly payroll? The monthly payroll is essentially, if you're keeping your books, it's your, and if you look at what you filed in taxes, it's what all of your employee related costs. So that's their wages, any of their compensation, any sort of group health insurance, state and local taxes that were paid on that compensation, Payroll taxes are not included in that. And the other one is this independent contractors who were acting like employees. So that's essentially what you're doing to come up with that number. And you're also going, and the cap, someone asked me about the cap. The cap is if there's an employee who earns more than $100,000 a year, let's say they earn $150,000 a year, just as an example. When we're counting what the total annual payroll of your organization is, that person's salary is capped at 100. And you include state and local payroll taxes, but not federal payroll taxes. That was another question I just saw come up. Okay, so that's the application. And Mihai, I think that's, we can flip back to the camera. This application will need to be supported by information that your bank is going to require. And really most of that organization, from what I'm hearing from everybody, is essentially the tax documents that you filed, the financial documents to support your employees. That would include a list of employees, the amount of pay that they've received, and the other, some what I'll call organizational documents. They want to make sure that the nonprofit has its articles of incorporation and its bylaws and that other information that you typically do. Now, each bank may be a little different, but that's what I'm hearing right now is that's the information we should be collecting. And so it's really understanding what your payroll is, getting all of the pieces of that put together, and then doing the calculation, and the loan is available for about 2.5 times that. What can these loans be used for when they come in? First of all, the loans are capped at 10 million. So that for each organization. But within that, when the loans come through, the money can be used to pay any of these payroll expenses we've just talked about, the salaries, wages, commissions, et cetera. Again, there's a cap on that $100,000 for an individual employee. They can be used to pay employee benefits. They can be used to pay any state and local taxes. And here's the extra things that they can be used for. They can be used to pay off the interest on any mortgages that the organization has. It can be used to pay rent on any rent agreement that was in force before February 15th. And it can also be used to pay for utilities that were in operation before February 15th. So that's what these loans can be used for. So they're based on your payroll, and they can be used for your payroll plus your rent cost, utility cost, and if you own a building, the interest on your mortgage. Now, the other nice thing about this, this loan is that if the money is spent in accordance with what they outline, the loan will be forgiven, so that you will not have to pay this back. It will turn into a grant. And there's some requirements. One, they'll have to certify that the money was spent on payroll, mortgage, rent, utilities. Two, if the number of staff members and your total payroll has to be maintained at the level that it was at previously. If either of those things are reduced, the forgiveness rate will be reduced somewhat. And in a later webinar, we'll go into more detail on that, because I think the most important thing now is to get in and apply for this money. And we can give you some guidance, and we can get lots of guidance on how to spend it once you have it. If the money is not forgiven, if the loan is not forgiven, the interest rate currently is 0.5%, 0.5%. It's capped at 4%. The loan is up to 10 years. There are no fees for the loan itself. There are no fees for any sort of early payoff. And the payment of the interest and principal is deferred for a year. So, but you've got to certify that the money you used went to the appropriate uses. So you want to make sure when the money comes in that you're using it for payroll, rent, utilities, and that the real goal here, you got to remember the real goal is to keep your employees hired or to bring them back. Now, some people have asked, what if I already have laid off my employees? You have until June to bring those employees back, and they'll count toward all the requirements of this payroll loan. So again, you've got to remember the underlying goal is to keep people employed. I had some questions going back and forth I've seen popping up. Again, what I've been recommended to do when it comes to owner name on the application is to put not applicable hyphen nonprofit, because nonprofits do not have owners. It's a public trust. So that's the answer that I've been advised to put on the applications I'm submitting. And so that's the way I would suggest that. The loan covers 2.5 times your monthly payroll cost as you calculate it. So that's what it's good for, 2.5 times. And I'm trying to respond to some of the questions. And in future webinars, when we have a little more time, we can, again, go deeper into how to make sure that the money you're receiving, you're spending in a way that's going to go toward allow you to forgive this. This could be an amazing program used properly at your organization if you're using that money really for your payroll costs and for rent and utilities. It could just be wonderful, and you'll very quickly determine how much money you're eligible for by looking at that payroll cost. So that's an overview of the program. This program also just, I haven't seen a question on it, but I've heard people asking me, what about, how does this relate to some of the other SBA loans? If any organization already received one of the economic injury disaster loans, that's EIDL, recently, they'll actually add that loan onto a PPP loan and treat it the same way. So all those details have not been worked out yet. There's still other loan applications and loans that can be applied for after this. And that's one of the things we're working on, is trying to untangle some of those to try to present them to you. So the first thing, again, I'm going to go back. The first thing is to download this application so you're familiar with it. That's what I would suggest. And the second thing is collect all the information on your payroll. What counts, what doesn't count. If you're running your books and how you filed your taxes last year, that will give you a lot of direction. But the one nice thing to remember is independent contractors who are treated like employees can be added to the payroll. And then contact your bank, because whether your bank wants all that information, all these supporting documents filed at once, or whether they just want the application or at once, is going to be up to individual banks. Again, you're applying to a bank, not to the SBA. The SBA guarantees these loans, but the processors of all these loans will be your bank or any local bank, but you probably want to start with your bank. There are lots of questions popping around. I've tried to get most of them. If there's some I didn't, just go ahead and send them and maybe we can capture them. But I want to throw this back to Stephen, and if there are other questions, I'll try to capture them during his presentation. We can answer some of it at the end of the hour.
Yeah, great. Yeah, there's some great questions here, and I think it's really good to get clarity on it. So we'll do this section pretty quickly and then get back so you can answer some of these questions, Jeremy. So hold on, folks. We'll get back to your questions, and a lot of this that Jeremy, all of this that Jeremy has said will be provided to you in writing after this session. So about 10, 12 days ago, we did our first webinar on kind of our emergency response to the situation. And a number of you I see were on that, but I want to do kind of a check-in on it. We asked folks to consider looking at where all their cash is, how to gather up their liquidity, so to speak, and understand how much cash they could get their hands on if they were going to need it. And we think that this is going to play out importantly because you need to try to keep your employees employed so that you can get this loan. And when it comes, uh, part of the key here is being able to pay them for a couple of months from this loan. So that cash is still very important for your operations. So one of the things that we had suggested that you might want to look at is pulling down your lines of credit. And it's still in a big picture, maybe a good idea for you, but we wanted to throw in a caveat. It looks like these loans are going to be somewhat dependent and judged once you get everything filled out on your organization's credit score. If you pull down all your loans and you have no available credit left, it's going to hurt your credit score. So if you're going for one of these loans, you can pull down your loan sum, but don't pull it down all along all of the whole entire line of the loan. These are for lines of credit I'm talking about, or other ways that you can borrow. So you want to get hands on all your cash, but you don't want to hurt your credit score at the moment. A lot of you are not dealing with that. You're just trying to figure out how much cash we've got in our bank accounts to make it to the next payment we may be getting. Uh, Second of all, we ask everybody to model out how to do a quick analysis by looking at your receivables, your payables, your cash in bank, um, how much money you've got to get out the door. And what we're saying now, after you've done that kind of analysis, it's time to really do a cash flow for April and May. And whatever size you are, it doesn't matter if you're a 3 people not-for-profit or a 200 person not-for-profit. It's really great to understand your cash flow. This is how businesses survive. So you want to take, how much money you have in the bank, and then how much money you think is going to come in and when it's going to come in, given our new reality. And in between, put in all the money that you're going to have to push out. And at the end of that, you will have a cash flow. The article that we used as a basis for last week's webinar is online, as is the video. So those of you who have not seen it can download the article explaining all this, plus the video. So, and then today there will be a checklist for people to think about things you could be doing here in this first week of April in preparation to make it through the next 2 months. And that's our long range planning at the moment, is trying to get through, for some of us, just the next few months. So we want to focus on understanding where we are financially, cutting our expenses, putting together plans for our employees, negotiating with all of our payables and our funders, finding out if they're going to pay us for part of our funding, if they're going to release restrictions on any grants we might have. I know a number of funders are doing that. We need to constantly scan everything, and the number of webinars and resource directories is just getting overwhelming. So I think it's very hard to sort through those. So part of our goal is to sort through particularly the resource guides and bring you what we think is at the moment most important for you guys. Also, you need to have a narrative, a communication plan that's consistent and honest, that you're using with your board, your funders, your staff, your volunteers, and make sure they understand what's really happening. I want to go back to your plan for your employees. As we talked about last time, the unemployment development offices, or the employment development offices in every state, and with now the CARES Act, they've really loosened up a lot of unemployment benefits, where you can get them immediately, where you don't have to be looking for a job to qualify, that you, if you're laid off part-time, you can make up the difference from what you're now making to what you would have been making, and etc. And so in helping your employees figure out what they're going to do if you've got to lay them off or you can't pay them, there's a huge opportunity here. There's also, which is enormous, a $600 a week addition to normal unemployment. So this means that if you have to temporarily lay somebody off for the moment, that they may be able to go to unemployment and get full unemployment plus $600 a week. And this is going to be huge for some of our employees. And I think those of us who may need to suspend some programs or slow things down, even if we're, no matter what size we are, that it's going to be so handy to have our employees getting paid enough for them to make it until we can reemploy them. So I just want to throw that out. And if you have questions about this, keep asking on chat and we'll come back to them. So we've given you this new checklist that we'll be distributing right after this meeting. And it's really about doing your cash flow. It's about contacting your local banks, and we want you to contact them regarding this loan program, but also letting them know your situation, if it's going to impact things about payments or dues. And I don't know if you've done this, but I'm starting to receive things for Caravanserai where credit cards and banks are saying, you know, if you need to slow down your payments, please let us know. Pay attention to those because it can really help your cash flow. One of the things we put in this week's article was you really want to consider doing this PPP loan. There's hardly any reason not to do it. And if you use it right, it's 100% deductible. I mean, it's not 75%. Somebody asked the word. No, it's not. But you've got to use it for what they say, which don't worry about so much now. Get the money now. And when we'll be talking more about how you can use it effectively. But if you don't use all of it, the rest of it just goes into a loan at 0.5% interest that you have some time to pay off. So it's not bad. Also, if you haven't really gotten your board involved and let them know what's happening, or your volunteers or your donors, now is the time to do it. Because they're out there asking questions, and your boards usually can be quite helpful. So those are the main things I wanted to go through, and I'm cutting it a little short because I want to make sure we're using our time well and have time to answer a lot of these questions about the payroll paycheck program. So Jeremy looked like he stepped away for a moment. There's Jeremy. Jeremy, do you want to take a look at some of their questions and get back to answering them?
Sure. I'm happy to. I'm going to go through the ones, and if I don't have an answer for you, I'll tell you that as well. Just to go and reiterate about this $100,000 employee, that seems to be raising a lot of questions, so let's go through it. What the program does is it caps the eligibility of certain employees who make more than $100,000. So if you have somebody who makes one employee who makes $150,000 a year, that's annually, this program says you can only count the first $100,000 toward that payroll amount. So that's $100,000 of the annual salary would be counted toward the payroll amount, and you just couldn't count the other 50. So that's not a monthly thing, and that's for any employee who makes more than $100,000 per year. So you're going to be capping that for your calculation on the loan amount. Amy asked a great question about when essentially do we need to bring employees back? And I have to tell you that I've been looking at every source I can look at, and there's not a real clear answer on that. The law says is you have to bring them back onto the payroll by the 30th of June. And in one of our future webinars, we can talk more about the process. But I haven't seen anything from the SBA that's given a great clear answer to the process, which is going to be a lot of thinking. As Stephen said, and as I said, our goal today is to try to make sure that you're getting in line to get this application in tomorrow if you can, because that's going to be the most important thing for you to do. My understanding is that state payroll taxes can be counted toward your payroll amount when you're calculating it, but federal payroll taxes cannot. In any situation where you have state payroll taxes, they can count, and local ones. That was my reading, and everything I've read on it suggests that. And again, when people are asking, where do we submit this loan and what information do we need to submit? This is why I think I am certainly done it. I was on the phone today with 3 different banks on behalf of people I'm working with asking this question. How do you want the document? How do you want the application? Online or mailed or dropped off? Or what can I do? And secondly is, do you want all of the supporting information with the application? And I have to tell you, I've gotten 3 different answers from 3 different banks. They're still moving very quickly. So in my view, the most important thing you can do is to get that application in tomorrow. But in order to do the application, you're going to have to gather the information today so you can fill it out. So you'll probably be able to rapidly produce any of that information as soon as your bank wants it. But for each bank, it's different. This is a different way of approaching these loans. Typically, loans from the SBA have been done most often through the SBA, but this time they're doing it through lenders. So I would recommend that step number 1 is call your bank and say, how do you want the application? And follow their instructions, and just be ready to immediately supply that supporting information. And remember, your supporting information has to agree with what you supplied in your various IRS filings, because they will go back and compare that so that they're looking at a reflection of what your real payroll costs are. Has anyone, Mihai or Stephen, are there any other questions that I haven't gotten back to? I try to consolidate some, but if there's one that I was scrolling through these quickly, but if there's something I've missed, give me a yell.
Yeah, I saw one here about if you're not for profit but work underneath a fiduciary, can you as a corporation apply for this money? So you're not yourself a 501c3, but you work underneath a fiduciary who is.
I would have a conversation with that. If you've got essentially a fiscal agent, I would have the conversation with the fiscal agent. The important part here is that there's not duplication. If the fiscal agent is filing that SBA loan and is including your payroll, no, you cannot. Most
So can anybody hear me? Can people
yeah,
hear me?
am I back
Okay,
on? Good.
Yeah.
Okay.
It doesn't show that I'm being heard, but okay, great.
Okay. Leslie, it's based on 1 year of payroll. So they're going to be looking at the documents you filed, and that's what they're going to be looking at is 1 year of your average. So your average monthly payroll over a year period, and they're going to want to get confirmation of that information.
Right, and they'll average by month.
Right.
So you've got the month figure. Yeah, absolutely. I also saw a note from Susan, cash flow payment a template, and Susie Gomez suggested looking at the nonprofit finance fund. They have one online that's supposed to be really good. So thank you for the question, and thank you, Susie, for getting that, because they have some very good stuff there. So that's terrific. All right. We're doing pretty good on questions. Mihai, are there more questions we need to take a look at? Okay. So let me look at this. There are a few more questions for you, Jeremy.
I saw one from Sylvia. Sylvia, I think that what you, if you're a new organization that hasn't had prior filings, what you need to be prepared to do is show financial records that show your current payroll for however many months you have it, and that you will be certifying under this application that that information is true and correct. If you haven't had it. And then when you do file the IRS filings going forward, those numbers should match up with the information you're filing to the SBA. I don't have a list of banks that are supporting the PPP, but it currently is any bank that is already supporting a SBA 7A loan will be supporting these banks. The government intends to also expand into some other banks and not banks. As of 10 o'clock this morning, I was not aware that that has happened. So that's why I'm encouraging you to go with the bank that you're used to dealing with, because chances are that they're probably a participant if they're a larger bank or they're a community bank. You don't want to wait on this.
No, Doug Koldmeyer just posted all the docs that you will need and listing them with the form numbers. So thank you, Doug. That's cool. Let's see, there seemed like be a couple of other quick questions. From like Susan's asking, Baco's asking, if we are on a cost reimbursement contract, will we pay the amount that we were reimbursed? Jeremy, can you answer that?
I'm unclear about what the repay the amount that we were reimbursed means. If you're, my understanding from this is this is eligible, you know, you're able to apply for anything related to your total payroll costs, that loan is there. If you're using that money to continue to pay your payroll and lease and utilities costs, you can have the loan forgiven. So I'm not exactly sure how the reimbursement would relate to that, but my understanding just from as we're discussing it, I would see that if that money came, if you had the payroll costs, you would be able to use the loans to continue to make those payroll costs.
Yeah, you're supposed to show that you have about the same number of employees. It's okay if you've got 5 employees and one of them has resigned and you only have 4 now. That's not going to be a problem. But if you like expand your number or don't expand it, that doesn't matter. When you get ready to spend the money, you'll have 2 months to spend the money. And you'll have the categories on when you can spend it on. It doesn't have to be the same employees. It just needs to be the same amount in those categories. So don't worry about that too much at this point, unless you really shrunk back. But then if you can't use all the money that they will forgive, then you can just pay the loan off with what's rest. So don't worry too much about that. There's quite a bit of flexibility. There's been a question a couple of times, I don't know if you answered it, Jeremy, about can you include workers' comp premiums as a payroll-related cost?
And I have been searching for that. I have not seen that anywhere listed as something you can include. And so I'm trying to find that. And if I find out the answer, we'll put that in the document we'll send out to everybody after this webinar. I have not seen it either expressly included or excluded. So I'm trying to find that out.
Okay, so I think everybody understands that we've been working on this, and I have to say Jeremy's been working on it like 12, 15 hours a day for the last 3 or 4 days to make sure that you have the most update stuff, consulted attorneys, banks, etc. We're still not we're not a fiduciary here. We're not telling you you have to do anything. We're just trying to give you the very best information we possibly can up to the moment. And just for you all to know, Jeremy has also been working the last 4 days organizing a volunteer system to make gowns for healthcare workers at Eisenhower Regional Hospitals. And I think you got a system going for 2,000 of these a day. Can you really do that?
That's our plan.
Do that?
We're ratcheting up to do that right now. So that's part of our effort.
But Jeremy has been working on this presentation for you. So if you liked it and think it was helpful, say yes to Jeremy. So thank you so much, and we'll keep watching questions. Wait, that's an interesting question. Okay, whoa, great, awesome, yeah, Jeremy's awesome. As this ends in a few moments, we're going to be sending you a series of information. We're going to send you the article that we wrote 3 days ago about what you need to do now. We're going to be sending you a video of this presentation so you can show it to others if you want to. We've got a checklist on things that we think you might want to be focusing on at this first week of April. We're going to send you a document that spells out the loan guide, which is basically everything Jeremy just told you. And then we're going to send you a copy and a link to the application. So, I mean, this is a bundle of stuff, but it's kind of curated for you, and hopefully this will be helpful to you. So we really appreciate you being here. So I wanted to make kind of a closing comment. Over the last few months, Caravanserai has been very concerned about how the not-for-profits that we work with, how much we're struggling about money and feeling trapped into this world of transaction all the time, just one transaction after another to survive, and very, very concerned about how we make sustainable not-for-profits that are making social impact and are transformative. And we were preparing to roll out a series of seminar workshops starting at the end of April on these topics. Well, that's not going to happen right now. We've had to put most of that on the shelf because so many things that you've probably been hoping to do. But we took our sustainability work and we've remolded it with our survival work. And we're going to be offering a online masterclass on survival and sustainability. And it will be limited to 10 to 12 people in each of these workshops. We've scheduled 2 so far. They're going to be 3 hours a day for 2 days. 1 day focused on survival, one on how to move that towards sustainability. It's limited in number because we're going to help each person and organization kind of design a pathway that's actionable to move forward with. And it's very intense. There'll be a charge for it. You can register online. The dates are April 16th and 17th. And the second one is going to be April 25th and 26th. You can find this all online with caravanseraiproject.org. So you can register online if you're interested. And also, we're going to be sharing with you there a video that we created in anticipation of what we were doing before on sustainability. It's about a 15-20 minute video really laying out the content. And additionally, there is an outline of the actual content and process for these workshops. So you know exactly what our content is and what the process will be. So I have one last question for you. So a lot of folks are looking at this loan stuff and it just seems kind of overwhelming given everything else we're supposed to be doing. And I feel like so many of you I've talked to are just exhausted and trying to constantly figure out, okay, what should I be paying attention to? I need to get home to the kids. the kids are at home. I've got to cook. We're all learning to cook differently. Um, would if we or some of the other organizations put together a really hands-on loan application assistance program, would that be helpful? Would that be of interest to you? If so, to say yes on the chat line for us so we know. And our problem is the speed of doing this, and what we're trying to do obviously today with Jeremy and the documents we send you is give everything we can to you right away so you can start moving on this. But we realize that this is going to go on for a few more weeks, and so if you think that'd be really helpful, that would be great to know. Okay, so I think we're about finished, and I don't see any other questions. Mihai, was there more questions? Okay, yeah. One thing Mihai is saying on here is to make sure that you check your spam or junk email folders in case you don't receive the information on survival and sustainability masterclass information. So we're sending you a direct link to those workshops. Great. Okay. This is great. Thank you all so much for coming. We know this is a lot of time given everything else that you have to do today. We really appreciate it and wish you the absolute best. Thank you. Bye.